everyone, welcome back to another weekly market update video featuring by Marketsall and Rationale newsletter service. Before starting, please take a quick moment and hit that subscribe button to support us for more content like this. If you find valuable whatever you see here, your support is pretty important for us, so that's why likes, subscriptions, that will be that will be more than welcome. So after today, after covering latest developments, especially went on the weekend, we will quickly skip to the chart section as usual to evaluate current market conditions and work on potential trade opportunities. So let me quickly go with this this chart. First of all, here you see S&P 500 charts, like a flow, with the news flow. Let's say like a recent since the beginning of October 2024. So big news on the tariff side. The United States and China have issued a joint statement announcing a temporary pause on most of their recent reciprocal tariffs, like this tariff escalation. Starting in early April, both sides will suspend the majority of the additional tariffs for a period of 90 days. This means US tariffs on Chinese goods will be significantly reduced from steep 145% down to 30%. On the other side, China will lower its tariffs on US imports from 125% to just 10%. It's an important development for sure that could help ease global trade tensions, at least in the short term. But markets will be watching for sure closely to see if this truth holds, or if it's just a temporary break in a much longer negotiation. And here, as you can see, the recent price action on S&P 500, as you might recall, that this Liberation Day, Reciprocal Day, that with that announcement we saw this huge decline. Then we saw some recovery here. Then we received tariffs postponed, and today, while I'm recording this video, the market, the starting of this week, started with a huge around a 2% gap up on S&P 500. But we'll see if that will be permanent, that recovery is permanent, because generally if this kind of gaps up generally are filled technically. On the other side, it's just the initial excitement in general, but we'll see. We need to monitor closely. So yeah, in general, also sign of diplomacy are emerging. Also Russia President Putin suggested holding peace talks with Ukraine in Istanbul on May 15 to work toward a lasting solution. At the same time, Trump announced a pause in US airstrikes after reaching a deal with Iran-backed Houthi forces in Yemen, and he's also in talks with Iran to stop its nuclear weapon program. So in general, this week started with all these positive news flow on potential agreements that will solve this all these conflicts around the world. So let me continue with the economic calendar. This week is packed with key April economic key data and few early May business survey. Overall, the softer indicators will likely weaken further, because as you might remember, that economic activity disruption had been started to seen on some soft data side, but we didn't see any major signs of in the hard data. That's why that's discrimination. That kind of evaluation is easy. Makes it easy to understand if the current risks are pretty serious or not, just to evaluate in that sense. So overall, the softer indicators will likely weaken further, mostly due to market reaction to Trump's tariff policies. Hard data might be mixed, but consumer spending should remain steady. Inflation this week is expected to ease slightly in April. The Cleveland Fed's inflation nowcasting sees nowcasting data sees headline CPI at 2.3% year over year, down from 2.4% in March, while a core CPI is projected to remain steady at 2.8%. Headline inflation could stay like tame thanks to stable energy prices. You might recall that I had talked about this. So since like there will be like a early election for Trump, like I mean there's still time for it, but in general like gas prices are pretty important in like US politics. That's why as they like pushing on the tariff side, that's for sure gonna lead some like a price increases, like that will generate some inflation. Then how could you tame the inflation? Oil is the like one of the best way, and through OPEC Plus, by just like putting pressure on Saudi Arabia especially, they're just like as they increase the supply, the oil prices will remain under pressure. With that mentality, we can say that like thanks to stable energy prices, the core inflation, I mean apart like the core inflation might show some early signs of like this tariff impact, but the headline seems like tamed. So US index futures, with all these like these conflicts are like on the way to be solved, like the US index futures moved higher, led by especially technology sector. The key takeaway for US indices is like during like Q1, like the first quarter season, the AI team continued, but only like got like saw some damage from this tariff uncertainty. But the long term, that structural improvements on economic growth is still there with the like AI developments. For example, like when you go to like a big, like when you go, for example, clients of Nvidia, you can see that like all like a magnificent 7 companies are still like investing on AI. So yeah, typically like with the US-China relations showing sign of improvement, we're likely to see an increase in technology sector also. Apart from that, now like with this all these developments, generally we see that like a strong when there's a like a risk off sentiment, we see that like dollar gains, right? That's the mentality. So I mean, it's not like risk on, and USD is not that like, I mean, you can't call them friends, you know. But now it's acting like that. Why? Because this trade, what is ongoing right now. We saw some USD appreciation alongside with like S&P like index or index futures, because it's kind of reversal of American exceptionalism is done mentality. You know, there were some rumors that okay, American exceptionalism is done, like European stocks indices are doing much better. It's like, I mean, it's that American equities like fulfilled. There was such mentality. So this mentality is reversed back. That's why there's a demand for USD, and that's supporting the USD for now. In an environment where like the tariff news flow has become very important, has like become the decision maker on the prices of like instruments, it's crucial to understand the current dynamics. USD is not acting as risk off instrument in the current circumstance. So that's why, like for example, when you see some easing on like improvements between US and China, I mean at least you wouldn't take USD short risk with this mentality in your mind. Meanwhile, with all these like positive developments, there might be like some profit taking activity in like a precious metals for sure. I'll come to the chart where it could potentially go. I'll try to show you. Also, Bitcoin running like for like a new highs, but like technically I'm a bit like a cautious, but like positive. I'm positive like in the long term, but I'm being cautious for the short term. I'll show you that in the chart as well. When you come to the oil side, due to supply side activities, again because of the reason that because of the factors that I mentioned just before, all this like political sides and stuff, plus technically I mean I would either sell or do nothing on oil still. All like I think appreciation in price is like a shorting opportunity, but yeah, you can be just with this hype, all like okay, economy is becoming better with tariffs like are gone and stuff. With that mentality, we might see some huge volatility on the positive side also that might stop you out. That's why you might be cautious around like with your initial position, by being like maybe getting like a less exposure. Then maybe you can build, like you can increase your exposure on oil short position. And yeah, that's my take on like oil. So let's skip to charts quickly. I'll try to show you. So let me start with the gold chart, and this is daily chart. I'm not gonna mention again all this like a long-term trends. It's, you already know that we're in like in the long term where there's a really high, like a powerful long-term uptrend. And now, as you can see, there's some activity of like, is this chart topping and stuff. That might be like generally, in order to say that like a chart pattern to be valid, at least you want to see some, maybe like a minimum like a 2 months of activity. But it doesn't matter, like it doesn't mean that it's not gonna work like even it's like lower than like 2 months, which is the case. So if you go to the 4-hour chart pattern, for example, you can see here that you can call it also like a descending triangle chart pattern in the 4-hour chart pattern. So a potential like a price target, when you look at 8% from the top, and when you calculate it, it's around here, which is like a $2,950 level, like around here. And as you can see, this is another like a pretty important like support level that acted before. So that's why I mean, just this is like, again, like this is like a 4-hour chart. It doesn't, I mean, for me, like I am still being like cautious because all these like recent developments on tariffs might be temporary. That's why still I'm on the side that as I see more like sell-off in gold, I might still act as a, like that might be a buying opportunity for me. And as you can see also, where we see some reaction on the gold price, it's like a pretty important support level. But I'm following this like a 4-hour chart. If I see a breakdown from here, it might potentially go to like 3,000 levels, and then depending on that current environment, I'll be evaluating its potential from market update videos for sure. Let me skip to Bitcoin quickly. If you're also following me on Twitter, I was mentioning this pullbacks to this this uptrend. This weekly chart uptrend is pretty crucial to me. And as you can see, starting from this like uptrend, this was the first like a pullback to this uptrend. This was the second, and now we're experiencing the third one. So we need to see some consolidation around here. And as you can see, when you go to the daily chart, as you can see, if we see a sorry. Oops. In the daily chart, if we see a potential move like this, that would also be a convergence to this uptrend, and that would be the last consolidation just before forming this head and shoulder continuation chart pattern. So in that sense, that's why I said like I'm optimistic but being cautious. So here, this area for sure, it's like a resistance level, and we might see a potential pullback around these levels, and we might see such activity, which would be much more healthy, if healthy breakout in that case. Otherwise, this kind of movement, like I was mentioning this, I had initiated the position from here, if you're like following videos, but then there was a flag. I mentioned this. Then I mean, now what I see is like I'll be like updating this chart also from my Twitter account as well, like X account, and it's highly like that will be expected for me to see such pullback around here and to form a head and shoulder continuation. So that's why I'm cautious. That's why in the short term we might see this kind of movement. So at least you can just have your stops. Maybe if you can, if you had been in this trade like from here or from this breakout or flag, doesn't matter. If you're still like carrying the position, maybe you can use your trailing stop in order to avoid such move. So quickly, oil again, quickly I'll mention this again. In the weekly chart, as you can see, breakdown, pulled back, resumed. It's trying to like pull back to that level, but I still believe that this downtrend is still on. And S&P, this is SPY, like it's the ETF of SPX. So 5,750 levels is pretty important for S&P index, which corresponds to this level. As you can see in the daily chart, you can see we saw this like gap up open today, and while I'm recording this video, and I'm just like questioning if it's managed to stay above this level. If it like fills here, I don't know, it might like we might see a further move around here if we're gonna see this resume. But why I'm showing this chart today is just I'm just being cautious with this 575, which corresponds to 5,750 levels in S&P index. That's the level that I'm watching. And quickly I'll show you, this is like a 30-year US yields, and this kind of rectangle chart pattern might act as like a bullish after like after a uptrend, or might act as reversal and might act as a bearish for sure. But I'll be following this level in order to see like because like as you might recall, inflation expectation, especially on tariffs, were gauged through this like long-term yields chart, and that's why I'm watching this one. But when you go to the, for example, US 10-year one, still this downtrend is intact, and I mean that will be risky for me when I see some like a breakout activity from these levels. That will be like a problematic time, okay? But like you can also evaluate, you can also monitor the potential inflation expectation arising from tariff developments from these charts. And when you go to the US 2-year yield, as you can see, this is not doing like that much like a movement to like a higher levels, because generally inflation expectations are reflected on the long end of the yield curve, and the 2-year like a short term of the yield curve is more related to the rate decisions, and we're like on the like there's a like a dovish path that we're at right now. That's why we see that divergence between that 2-year yield and long and short-term yields, and that caused the US yield curve to normalized, which is like a short end of the curve is like a lower than the long end of the curve. So if there is a positive USD activity, I had mentioned this again, like this USDZAR, there's a really nice, like you can call it this in the monthly chart, you can call this as a, I don't know, ascending triangle maybe, or yeah, ascending triangle, that might, you can call it like that. Or when you go to the weekly chart, here this move, cup with handle, also here is also forming another cup with handle, and I will be betting on potential reversal from, after seeing some consolidation around here, a potential breakout from here. This level might be a good opportunity to be long to before just like a breaking out of this level. So if there's, I mean, if I would like if I would like to trade on like a bet on USD against like any kind of emerging market currency, that will be USDZAR parity for now. USD Mexican, here another emerging market. This is the weekly chart. I'm just showing this because there's still there's a potential of forming a head and shoulder bottom chart pattern if we see such reaction. So just 2 trade ideas that you can monitor for being long in USD against emerging market currency. In the futures market, soybean oil is a really nice rectangle chart pattern formed after this huge downtrend. It has, the price established a rectangle chart pattern here. First we saw a breakout, that was a fake breakout, then got in the range, and now it's attempting the second breakout. You can just like bet on like this to be longer with like a current price with a stop here. That might be a nice option in the futures market. And lastly, I would like to show you like few trade ideas on crypto market. Stellar Lumen XLM is, as you can see, head and shoulder bottom chart pattern is formed, breakout pullback, and the price is trying to resume its breakout. That's the first one. and ATOMUSDT, COSMOS-USDT. As you can see, rectangle chart pattern formed. Breakout, and it's, as you can see, this breakout is above this red line, which is 200-day moving average, and now pulling back. That might be an opportunity to be long again. And lastly, I would like to show you this Ethereum BTC chart, because why this is important. In order to measure, in order to evaluate if this like a crypto flow is crypto side, in the crypto side, the money, the funds are flowing from like a Bitcoin to the like altcoin. That's the always question. There's like a indices for greed and fear in the indices and stuff. It's highly debatable. But basically, this is the chart I'm following. And when you go to the monthly, as you can see, a reversal that we see here is like a pretty important support level. And I mean, generally, like at least I can say that maybe Bitcoin dominance might be fulfilled, at least for a short term. And that's why, I mean, as I mentioned, like I'll be following that Bitcoin chart to like pull back to, in order to form a head and shoulder continuation, like as I mentioned. Let me show you quickly again, just to remind. In the daily chart, we might see this movement, and while this movement is like happening, maybe we might see some like altcoin activity on that side, and that's how I'm monitoring this like altcoin and Bitcoin divergence. And yeah, that's all I'm gonna talk about this week. Thank you for your time, and like again, like any kind of support from you, like subscription, like, and if you find valuable, please like share our videos with your like friends. And I wish you luck in your trading, and I wish you a really nice week for you. Have a good one. Bye.